There are many ways to invest in property, make money from property investment, and equally there's a number of different strategies we have available to us as investors. So it can become quite confusing and sometimes very difficult to determine exactly what strategy is best for us or suits us as investors, each one of us, because we're all going to be different. And it's made even more difficult, I think, because of all the media that we're exposed to, where we pretty much see examples where people have done large developments and made huge amounts of money. We might even pick up a book where there's a photo of somebody standing next to a luxury car, with a title From Rags to Riches. So it can become difficult to actually navigate through all this information to determine exactly what best suits ourselves. So in this video, I'm going to run through the 4 main investment strategies, and also I'm going to look at 5 questions that we really need to ask ourselves or ask about each strategy to see how well it actually fits with who we are as an investor. So as we run through each of these strategies, the 5 questions that we need to ask are: what is the level of experience and knowledge we require? What is the level of or amount of capital we need for each strategy? What is the time commitment? And also too, what's the level of speculation? And then the last one is, what is the ability to gain finance to fund that strategy if we need finance as well? So they're the 5 questions that we're going to ask as we move through, or you can ask yourself as you're thinking about each strategy. So then you can look at how does that strategy work for you when you ask those 5 questions about it. So the first strategy we're going to look at is a buy and hold strategy. And this one is what a lot of property investors adopt as their main strategy, primarily because a lot of investors have a balanced risk profile. And a buy and hold strategy is really just that. You acquire the property and you hold it. So you buy the property and you hold it, buy and hold. Now, typically that holding time frame will be 10 to 15 years. And we do that as investors, or we adopt that investment strategy option because over that period of time, because it allows for a number of cycles through peaks and troughs of the property market. So typically, if we go through and look at statistics, property values double, conservatively every 10 to 12 years. So we can say that if we're going to hold it for 10 to 15 years, then we're going to at least get a chance of that property value doubling over that time. The next strategy is called flipping. So adopting this strategy basically means that we're going to acquire property and we're going to gain profit from a combination of different things. And generally speaking, they will be either buying below market value, buying cheaply. I won't say necessarily cheap property, but you're buying it at a discount value. You may renovate the property, or you could acquire it in a rising market and then sell to make a profit by just holding it. But generally speaking, unlike a buy and hold strategy, flipping would be done over a much shorter time frame. Okay, renovating. So this is one we're probably all very, very aware of. Numerous shows about renovating properties. So the strategy involves acquiring a property. Typically it'd be in need of repair, and you would look to buy it because of its condition below market value. The strategy then would involve renovating the property, and the profit would be derived again by the improvements made by renovating the property. Obviously, when you sell it to make a profit, you need to obviously have a sales price that basically is greater than the purchase price and greater than the capital that you've used to renovate the property. And the 4th strategy is development. So with the strategy, typically you'd acquire land, may already have a dwelling on it that you knock down. So you've got a parcel of land that is large enough where you build a new one or multiple dwellings on that block of land. From there, you either look to sell the properties for a profit, or you may even just hold them and rent them out. Or it could be a combination of both, but property development is the last one. All right, so if we look at those 4 main strategies, buy and hold, flipping, renovation and development, we can then work out and apply those questions. So if we look at it as broadly speaking, we can see that for a buy and hold strategy, the level of knowledge and experience we need is quite low. We can always get people to help us out with that, but it's quite low. The time commitment is pretty low as well. The level of capital, I mean, you can get a 90% loan to value ratio, a 90% loan, so that requires a 10% deposit. So the amount of capital required is quite low. Speculation, because we're holding it for 10 to 15 years, low as well. And then it's also, the last one was about ability to gain finance for that strategy, and obviously we know that that's quite easy to do. So if we move through and look at the other strategies, as you work up the list, it really then, you can see quite clearly then that the last one, the development, requires quite a lot of knowledge and experience. So this is if we're doing it themselves, remember. So this is not necessarily engaging anyone to do it for us. So we're looking at it through our eyes as an investor if we're going to take this on ourselves. So the level of knowledge and experience to do a development is quite high. The time commitment is quite high. The level of capital can be a lot higher than it is for all the other strategies. The amount we speculate, I mean, if it takes 12 or more months to complete a development, then we're speculating about how that market's going, well, what that market's going to look like and what it's going to do over that period of time. And then it's also around financing. So that can be quite difficult as well, particularly if you don't have a track record in development. Banks or lenders will be quite hesitant to fund a new developer, if it particularly, well, depending on the size of that development, but generally speaking, financing a development is harder to achieve than it is for the other developments. So the other things we need to look at, particularly around flipping and also renovating, is that if you're buying a property, so you're buying it for investment purposes, obviously. If you're going to renovate a property and flip a property, more so around renovating, that you've got to factor in also too that whilst that renovation process is taking place, you're not receiving an income. So then we talk about what working capital we need or capital we need. Part of that is, yes, capital will be to acquire the property, to renovate it, but also we need to make sure that we've got capital set aside to cover any interest costs, any costs in general, but interest costs probably mean the primary cost of holding costs during that time. Make sure that we've got enough capital set aside to cover those interest repayments whilst the property's getting renovated, and also take into consideration the fact that we're not going to be receiving any income. Now, depending on what renovations you do, but obviously if you've got a tenants living in the property, then there's a whole lot of the renovating parts of renovating that you can't do. Obviously the tenants are going to need bathrooms, they're going to need kitchens, etc. So overall it's very, very difficult to renovate a property with tenants occupying that property at the same time. So if you run through those 4 strategies, try and remove the glamour from it, apply a commercial approach, be realistic in looking at how suited you are to that strategy or the strategy to you. Often, way I look at it, it's like going through school, and property development as an example of development. Then I see that as like a university type strategy. And if you haven't gone through primary school and high school and you jump straight into a development, then you could be in trouble. I'm not saying you will be, but again, there's a lot more moving parts, and we've seen the risk around that development as far as time, level of commitment, knowledge, financing, the holding time frame, that type of thing. Speculating, again, so you do hate to get into a development, start it, and then 12 months later when it completes, the market's actually dropped and fallen away, and you find that with your strategy or your exit strategy, I should say, was to sell the properties off, you may be in a position where you just can't do that. So you need to make sure that plan B, which would be renting them out, still works for you. So with all these strategies, the higher the risk, sometimes it can be a higher reward, but at the same time we need to make sure we've got plan Bs and what if scenarios covered. So they're the 4 main investment strategies. They're 5 questions we really need to ask ourselves and the strategy to find out how suitable we are or it is for us. So very, very important that we work through that process. Otherwise, if we're just thinking this is going to work and it's going to be great because I've seen somebody else do it or I've read a book about it, what have you, then there's probably for for every one person who succeeds, there might be 1,000 people who have failed at it. So just don't go with the "this is going to work" because I've seen it happen on TV approach. So I hope that's helped, and it's a great exercise to run through. By doing that, we can save ourselves a lot of heartache. I don't want to sound like somebody who's trying to put people off taking on certain strategies. However, we really do need to make sure that if we're going to do it, we're going to get it right, and we're not going to stress too much about it and put ourselves into financial hardship. So sometimes it's better to go through and cut your teeth, if you like, or skin your knees on easier strategies or less risky strategies, and then build up from there. And certainly I've done that, and I'm glad that I did take the time to learn a little bit about property investment in general and money and lending and all those things before I ventured into other more involved strategies. So really, again, I thank you for watching the video. I hope you found it interesting. If you did, please feel free to give it a like. If you haven't already subscribed to my channel, that'd be sensational if you're happy to do that as well. But whatever you choose to do, I wish you all the best in your journey. Thanks so much.